Okay, what's saying people, and welcome back to another video. Now today we've got another educational video for you, and I'm going to try and help you improve your trading by learning how to use key levels. So first we're going to talk about how to identify key levels, and then how to apply them into your trading when you're entering trades, exiting trades, and even when you're managing them. But before we get into that, make sure you subscribe to the channel and also leave a like on the video. That is all appreciated and it really helps the channel out. If you haven't already, make sure you subscribe to my Telegram channel. I'll leave a link to that in the description. So I'll be posting a lot of different trading setups throughout the week, and you don't want to be missing out on that. So make sure you go check that out. But like I said, it's another educational video. So let me stop talking and let's get into the charts. Okay, so now that we're in the charts, I'm going to show you an example of what a key level is in the market, and also how to identify it and how to apply it into your trading. So this is GBP/USD on the daily chart, so I'm going to give you a quick example of what a key level is. So straight away for me, key level in the market, going through the market here. As you can see, acting as support here, push the upside, again support there, push the upside, third time again, push the upside, acting as a support. Price broke it, a lot of momentum to the downside there, again push the downside, acting as resistance now, then back again, acting as support again. So a key level in the market is essentially a level that's acting as both support and resistance, and you tend to see the market gravitate to this area. And when we normally see a break of this area, it's normally very impulsive because the price needs a lot of momentum to go and break through this level because of its significance. So as you can see here, price seems to be attracted to this level a lot. Now this is a key level that you want to be trading to and trading from as well. So for example, let's say if I was selling up here, you can see previous resistance, give us a move to the downside. Naturally again, be looking for some shorts around here. As you can see, move to the downside. Where did the price go to? Went to go and test our key level all the way down there. You can see we do have support here in the market. As you can see, push the upside, ranging, push the upside there. So again, that's the area of support. People could be targeting that, but if I was trading this chart again, I would be targeting the key level, because you know more often than not price does reach the key level. Obviously it's not all the time price will reach the key level. You could see price reverse just before it. As you can see, this is a clear example here. Price didn't quite reach the key level there, and you can see we reverse to the downside. So it's not always going to happen, so that's why you have to use it with other components as well, like trend lines, moving averages, indicators, chart patterns, price action, whatever you use to trade the market. Combining it with key levels as well can really help improve your trading, because you'd be finding yourself holding on to trades a little bit longer just to milk your profits a lot more, and also entering your trades at a better price because you're waiting for price to go and hit a key level. As you can see here, support there, you could potentially be looking for buys, but you can see price just broke straight through that level, came to test the key level. You can look for buys here, and as you can see, we did get a nice move to the upside. So you'd be better timing your entries and better targeting your trades as well. Now key levels are not just limited to the daily time frame. You can see key levels throughout the market, throughout different time frames, all the way to the minute, all the way up to the monthly time frame. There's key levels everywhere in the market, and if you can identify them, you really help improve your trading. So for my second example, I'm going to look at USD CAD on the 4H time frame, which is the time frame that I normally trade from. So again, you can see running through the market here, key level here. As you can see, previous resistance there, push the downside, resistance again, push the downside, resistance there, push the downside, again resistance, push the downside, again support, push back up, again resistance, push back down, and again we're at that same key level right now. So again, if we have a strong impulsive move like we are having right now, as you can see here, impulsive move broke through the level, impulsive move broke through the level, impulsive move broke through the level. So you can see we're having another impulsive move, so potentially you could be seeing another break through the level there. So let's say I was selling the market from here, I'll be targeting the key level, and if I'm getting price action like that, very strong candle to the downside there, I'll probably be holding onto my trade, and now I'll be using the key level to manage my trade. And I can say to myself that as long as price stays above my key level, I'll be looking to target next support. So again, you can see we have support right here, push the upside from this area. So now I could be targeting that area in the market here, as long as we stay above this level, because now this is going to be acting as resistance. We could see price maybe come back to retest it and continue back down. But originally my target would have been the key level, and you would apply that across the whole market. So as you can see here, let's say you wanted to buy the market from here. As you can see, price came test some support again, we had a move to the upside to test the key level. We went right back to go and test that same support again. If you're going to take a long trade where you're going to target the key level, price had a move, didn't quite test the key level, moved back down, but then where did it go? Hit straight through the key level, broke through that and continued higher. So you can see key level is acting again and again. Price moves to this level more often than not, so that's where you can be targeting your trades. Now again, like I said, all the time it's not always going to work, but that's when you use other components to help you manage your trades, like moving averages, which is what I use as well. Trend lines, again, that's what I use. You've got indicators, price action, chart patterns. When you combine it, they become a really powerful tool. And for my final example, I'm going to use Euro AUD, and this time I want to drop it to the hourly chart. So again, this is all the live markets here. You can see this is where the price is right now. So again, I'm not, you notify me scrolling back to find examples of this. This is all happening in the recent markets, and you can see if you go and check the data, it's been happening for a while as well. So again, hourly time frame straight away, key level jumping out of me here. So you can see here, resistance pushed the downside. Again, resistance pushed the downside, broke through, a lot of momentum. Again, support here, push ups to the upside. Again, push the upside. Again, support all along there, broke through. Again, move to the key level again, big push, a lot of momentum. And then you see price came right back down, test that same level. Again, support all along there, broke it, but a lot of momentum. Again, so you can see price keeps coming to the same level. So more often than not, that's where you want to be targeting your trades from. Obviously, not all the time it will get there, like I'll be saying. But when you combine it with other tools, you can really be onto something powerful here that can really help you trading and really hold into your trades that little bit longer just to get those extra profits. So again, if we have another move to the downside, maybe to go and test this area down there, it could be a nice area to target back to that same support, which will be time resistance now. As you can see, support there will be time resistance. So again, it's a nice area where you want to be targeting your trades and also using them to enter your trades as well. So remember, a key level in the market is essentially an area in the market that's acted both as support and resistance, and is normally broken with strong impulsive moves with a lot of momentum, because you need that momentum to go and break the level, because it's a strong area in the market, a significant area in the market. So again, this is just an idea, concept that has really helped me with my trading. It helps me hold on to my trades a little bit longer, because normally I find myself not holding onto the train long enough and just see the price keep going in my direction when I've already taken my profit. So just be aware of the key levels in the market. I'm not saying that you have to target your trades always to that level or always take your trades from there, but just be aware of those levels, because you tend to see price normally drift to that area and normally go and test it, break through it, or see price go and reverse at that area. Okay, so that brings us to the end of the video. So I hope you all enjoyed it and you learned something today. And if you did, leave a comment of what you learned, or if you have any questions, and I'll make sure I get back to you. If you haven't already, make sure you subscribe to the channel. That really helps. And also leave a thumbs up on the video to let me know that you enjoyed it, so I can release similar content in the future. But like I said, it's the end of the video. I hope you enjoyed it, and until the next one, I'll see you later.